Hello again. This is John Rickgarn back to you with day two for April, which is Financial Literacy Month, and kind of a challenge that I had for myself to educate my viewers as well as some of my clients that I work with as a real estate agent. I wanted to come up with 30 different ways that really anyone can get started in real estate investing or, dip their toe in the water, if you will. Now, if you remember from day one, we had talked about publicly traded REITs. And I say that specifically because there's actually two different types of REITs or real estate investment trusts. We talked a little bit about publicly traded ones that you can buy and sell off, your Vanguard account, your TD Ameritrade, your Fidelity, whatever the case may be. And now there's another subset of that, which are privately held real estate investment trusts. And I will get into the differences here in a minute. But first, I want to share my screen. I'm just going to give one example of a privately held REIT that I invest in. I've invested with this platform, oh boy, for at least 4 years. I actually lost track of time. So with that, I'm going to share my screen. All right. So I actually just logged in right to my dashboard with Realty Mogul. Now, as of right now, you'll see that I've invested about 4,900, distribution 1,700. Don't let that scare you. Minimum investments for private REITs. Now, they won't be as cheap typically as you will see, with some of the ones I mentioned yesterday for publicly traded ones that you can buy and sell off in exchange. You can buy one share for, $50, $70, 17, $8, whatever the share price is at that particular moment. Typically, a lot of these REIT platforms might have a minimum investment of 500 to 1,000, depending on the strategies outcomes that they're trying to get. Might even be higher up to, seeing as high as $35,000. So, kind of a wide range of that, but I just kind of wanted to focus on the minimum investments of about $500,000 to get involved. You don't have to be accredited to start in this platform or many of the REIT platforms. And you can see from my screen here, I've invested about $4,900. I have received about 1,700 in distributions. I've reinvested some of those distributions, and that's distributions that have been paid out. And this is just solely as the Realty Mogul Income REIT that, like I said, I myself have personally invested in. Distribution right now annualized about 6%. So, I mean, not horrible, especially in this low interest rates environment that we have currently at the time of this recording. Now, I bring the private REIT versus public REIT for two specific reasons. Now, you'll see here NAV per share, and I'll just highlight it there. And basically, each share price is $17, or excuse me, $10.77. And if you hover over this, it'll say the goal of the net asset value calculations provide a reasonable estimate of the value of the REIT's common shares, yada, 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 yada. So, what does that mean? Well, as you've probably noticed in the stock market, if you've lived through flash crashes, if you've seen March of 2020 comes to mind, the Great Recession with Lehman Brothers going bankrupt, the dot-com bubble around 2000. There's an old adage in the stock market that the bull goes up the stairs and the bear goes out the window. Basically, it's not uncommon that it might take years to see growth in your stock portfolio, but when a bear market hits, I mean, you could lose 10, 20, 30, 40%, seemingly overnight or out of nowhere. Obviously, too, sometimes when news hits, whether it's, AMC, GameStop, Peloton shares, sometimes you can see a share price just nosedive 25, 50% in one day. So there is a lot of volatility because it is basically freely tradable on the open market. You, myself, hedge fund managers can, buy, sell in milliseconds, basically, and all that data is going through the market. Is there, more selling pressure versus buying pressure, et cetera, et cetera. Now, with a private REIT, you don't have near as much volatility. So I can share from my experience, this NAV per share like I said, I've been invested in this for many years. It's, kind of been around the range of $10 to $12 a share. So not a lot of volatility. Not like I log in today, it's 10.77, and tomorrow it's 9.50, and then it's 15, and then it's $5.27. Nothing like that. So there's a lot less volatility with this because there's a very small market for it. I can sell my shares back to the company. Maybe there's other investors that want to come in and buy in, and their shares aren't traded near as rapidly as you see on the NASDAQ or the Dow, for instance. Now, with that, some good news is maybe some bad news. So, like I mentioned yesterday, and I'll just throw out the stock symbol O. Realty Income, what's dubbed the monthly income REIT, and that fluctuates, daily, hourly, even by the minutes. I checked this morning; it was around $70 a share, but that can go up and down, many times if we see some volatility. But the plus side of whether it's O or another publicly traded REIT, I can buy and then sell within a matter of minutes. I can sell tomorrow. I can sell the end of the day. I can hold it for a year. I can hold it forever. There's a lot of flexibility with that. But with that flexibility can come the volatility, like we've seen with previous flash crashes. With a privately traded REIT, this doesn't go down a whole heck of a lot. It might fluctuate, and usually about once a month, I get an email say, well, the NAV is now 1070 or 1050 or 11 or whatever the case may be. So not near the volatility as you see in the open market. With that, then is kind of a downside. I can't just go in, click a button, say, I'm going to sell. Typically, these are viewed more as a long-term investment. Sometimes you are locked into a year, 3 years, maybe 5 years, and sometimes they will don't want to guarantee that they'll be able to cash you out per se, but typically they just do that on a quarterly basis. So just for viewers information, about 2 months ago, I put in a request. It's like, hey, would I be able to take out a couple $1,000s? And I'll get into the reason why here at the end. So I put in the request, they review it, they say, yep, we were able to satisfy, I think it was like 29% of what you requested. Those funds will be dispersed in, I think, middle of April. So they do the disbursements about once a quarter, and it's kind of up to the discretion of the officers, business owners, whatever you want to call the group. But with that lower volatility, isn't as much liquidity per se for getting your investment out. So, this isn't something you want to invest your mortgage or rent payment and hope to pull it out next month to make your rent payment. It doesn't really work that way. So, I mean, there's pros and cons both way. If there's less liquidity, typically less volatility, vice versa. If there's a lot of liquidity, like the general stock market, then you might have higher volatility. And then just finishing up here, like I said, this is my own dashboard, about a 6% return from the Realty Mogul Income REIT, but they actually have several others available. The other nice thing I like about this is they have the option for reinvesting distributions. So, I'm big passive income. My tagline is financial freedom, one bill at a time. So I can get a monthly distribution like I do now, and whatever that amount comes to, that goes right into my bank account to pay a bill. If I want, maybe I don't need the income, I can just click this and reinvest the distributions, and I can toggle this back and forth anytime I want. So I like that flexibility that you can just turn on, turn it off, kind of like a dividend reinvestment plan to grow your portfolio or use it solely as income, whichever you prefer. Then last thing I'll just highlight here, I'll just go back to the main page here for Realty Mogul, and you can go to this yourself, realtymogul.com, or you can go to wealthandfreedomnexus.com. There's a link in there for under investments, and this just kind of gives you a thorough offerings that they have various different funds. Some have a wait list, some have open for pledging, some are open for investment. Obviously, you have target hold period 3 years. What type of returns, if you got to put in $5,000, if you got to put in $35,000 and then some. So there's a lot of flexibility with it and a lot of options available with that too. So let's Okay. So, in closing, I'll just mention, yeah, I mentioned that I am divesting some a little bit through putting in requests to pull out some of what I put in over the years. Why is that? Well, as much as I do like the passive income, as much as I like REITs, holding them on your own per se, and I touched on this in video number one, this basically gets taxed at your ordinary income tax rate versus, like a dividend from a stock or maybe business ownership. So if you're at, I'm just throwing out, say the 24% marginal tax bracket, but maybe you're in a tax-free income state, for every dollar you earn, about 1/4 of that's going to go right to taxes. So typically, not the most tax favored investment, uh, on your own or in a bank account that's in your own name. That said, there are options to open up a self-directed retirement account, traditional or Roth. I've had on a few providers on my podcast, Specialized Trust. I believe that was episode number 6, and Quest Financial with Derek Long. Both great providers of self-directed custodians that allow you to invest in things other than just stocks, bonds, and mutual funds. So I'm actually researching, if you will, of pulling out my investments, probably reinvesting in Realty Mogul. I've been very happy with them over the years, but just invested through a tax-free portal, and this would be through a self-directed Roth IRA. I'm still checking the, dot all the I's, cross the T's, make sure everything's legal and meets the SEC guidelines and all that fun stuff. But having it set up when it's in a tax-free bucket. If you've followed David McKnight for a while, just like I have, from the Power of Zero, he always talks and is a big cheerleader for the tax-free bucket. So down the line, probably when taxes go up, not if taxes go up, money set aside in a Roth account is essentially tax-free forever. So back to those marginal tax rates like I was talking about, versus having this income coming to me and then quarter of it going right to taxes, 100% goes in my pocket. There's no taxes to worry about. There's no K1 filings or anything like that. So this is just my, personal advice. What I've done personally is try to set up my investments and structure them the best to minimize my tax bill as much as I can, legally, of course, and maximize the upside, maximize the income, and just kind of structure my finances a little bit more simple for my accountant and advisors. So with that, I'm going to close out this video, video number 2, day 2, Saturday, April 2nd, 2022, for way number 2 that anyone can get started in real estate investing.